BOJ continues ultra-low prices, warns against sharp yen falls. Tokyo. The Bank of Japan maintained ultra-low hobby rates on Friday and vowed to protect its cap on bond yields with limitless shopping for, bucking a global wave of monetary tightening in a display of solve to consciousness on assisting a tepid financial recuperation. The yen fell as a whole lot as 1.9% and bond yields fell after the selection, which was widely predicted, however disappointed some market gamers who speculated the BOJ should provide into market forces and tweak its yield cap policy. However, in a nod to the hit that the yen's latest sharp declines might also have on the economic system, the BOJ stated it should closely watch the impact exchange rate actions should have on the financial system. Recent rapid falls within the yen heighten uncertainty at the outlook and make it difficult for groups to set commercial enterprise plans. It's therefore negative for the economic system and unwanted, BOJ Governor Haruhiko Kuroda informed an information conference. At the two-day policy meeting that ended on Friday, the BOJ maintained its 0.1% target for short-term rates and its pledge to manual the 10-year yield round 0% by way of an 81 vote. The significant financial institution also caught to its steering to hold rates at gift or low tiers, and ramped up a program to buy a limitless sum of 10-year government bonds at 0.25%. Raising interest costs or tightening monetary coverage now might add similarly downward pressure on an economy this is inside the midst of convalescing from the COVID-19 pandemic's pain, Kuroda said, brushing apart the hazard of a near-term fee hike. He additionally stated the BOJ may not tolerate a upward push inside the 10-year yield above its implicit 0.25% cap, and had no plan to boom the upper restrict no matter strain from rising global yields. There was hypothesis the BOJ should tweak policy to address foreign money actions, but the solution from the significant financial institution turned into no, stated Shitaro Kugo, an economist at Daiwa Institute of Research. Kuroda's comments highlight the BOJ's function as the arena's final foremost dovish valuable bank, as its friends aggressively tighten financial policy to diminish surging inflation. Caught in a dilemma, central banks throughout Europe raised interest rates on Thursday, some with the aid of quantities that bowled over markets, within the wake of the U.S. Federal Reserve's 75 basis point hike. The growing policy divergence between Japan and the rest of the world has pushed the yen to 24-year lows towards the U.S. greenback, threatening to chill consumption by boosting already growing import expenses. The authorities and the BOJ have escalated their warnings in opposition to sharp yen falls, inclusive of issuing a joint announcement final week signaling readiness to step into the forex marketplace if essential. We ought to carefully watch the impact financial and foreign money market actions could have on Japan's economy and charges, the BOJ said on Friday, inclusive of a reference to exchange fees in its coverage statement for the primary time in a decade. Such worries over the weak yen, however, have now not deterred the BOJ from protecting its cap for its 10-year yield goal with the aid of ramping up bond purchases. The yield cap has faced assault by way of traders betting the imperative financial institution may want to adjust its policy as growing U.S. yields push up long-term charges across the globe. The 10-year Japanese Authorities Bond (JGB) yield hit a 6-year excessive of 0.268% in early alternate on Friday, earlier than chickening out to 0.22% after the crucial bank's policy choice. Shortly after the declaration, the BOJ made an extra offer to buy limitless quantities of 10-year JGBs, which includes people with 7 years left till maturity. The BOJ is caught in a catch-22 situation. With Japan's inflation nicely beneath that of Western economies, its awareness is to aid the still weak economic system with low quotes. But the dovish coverage has precipitated a droop inside the yen, hurting an economy heavily reliant on gasoline and raw cloth imports. With Kuroda having ruled out fee hikes, the onus can be at the authorities to fend off any in addition yen plunge, together with the aid of intervening inside the marketplace to prop up the currency. Analysts, however, doubt Tokyo can get consent from Washington and different G7 participants for a joint intervention, or that stepping in solo would work. There's a myth within the marketplace and public that foreign money intervention works. But the fact is there is now not a good deal the authorities or the BOJ can do to stem yen falls, stated Takeshi Minami, leader economist at Norinchukin Research Institute. I suppose the BOJ will just sit down tight and climate the typhoon.